I'm Emily Garrett with Experian, and I lead a team of analytic consultants who work with our small business lenders in our Ascend Analytical Sandbox.
I'm Arun Narayan. I'm the Chief Product Officer at Kapitus. I lead product and analytics and launch digital and financial products leveraging AI and ML.
Today, we're going to talk about some of the challenging economic situation that we've had over the past few years with the pandemic and the period of time of economic uncertainty and inflation. Since then, what we've seen is that often small business sentiment does not always align with what the economic indicators are. On the lender side, what we've also seen over the last couple of years is a changing landscape of credit tightening and credit loosening. And even though we're finally starting to loosen now after a period of tightening again, and that's also bringing demand back up, this turmoil has really created a big challenge for a lot of our lenders like Kapitus.
We could not, as a lender, really differentiate between those that had really sound business models to support and serve debt versus those that could not because of the amount of liquidity that was there in the economy. We also saw a surge in application volume as banks tightened as well. We saw an increase in the application volume. And we stuck to the fundamentals of risk management, continued segmenting our customer base, continued making sure that we looked at customers that did not take our offer and why, and leveraged the Sandbox from Experian to also look at what was the risk of the customers that did not take capital from Kapitus, and if there was something that we could do to make sure that we made them the right offer. As banks tightened, those customers applied to us, and what was a customer that was near prime or a customer that was seen as mediocre by a bank, we would potentially see them as good credit, and those applications started coming to us. And so those are the customers that we saw. We tried to make sure that we made the right risk versus reward trade-off, and offer them the right product or right at the right price for the right term. There is one other area where we leverage the Sandbox, and it was in trying to understand in our processes what was really important to the customer.
What changes, if any, were you making to your actual acquisition risk models?
We definitely redo the model itself every few years. And so doing that in the Sandbox helps us look at the latest data and look at the entire industry data and build our risk models. The adjustments that we've made historically is adding new data sources. That is definitely number one. The time period that we choose is number two. And then looking at honest data that can add value as well, in addition to data from third-party sources. Mm-hmm. So those are the three big areas that we tend to focus on. And of course, we leverage alternative data from Sandbox as well.
Kapitus were able to really capitalize on the increase in applications that they saw and make some adjustments using analytics in order to grow and thrive during that period. And some of that was using just fundamental risk management practices, and some of that was looking at alternative forms of data and maybe different ways of looking at customers, industries, and product opportunities to make sure that while you're growing now, you continue to grow in the future and are able to really offer that sort of flexibility that's so important to small businesses and making sure that they have the capital that they need.